Hey guys, welcome back to the second episode of the Friday Ticker, where we talk about the stock market more in detail than we normally do on It's a Wealthy Life, the channel. So in this episode, I'm going to talk about the basics of market mechanics for the stock market. So let's get into it. Now, at the beginning of every episode of the Friday Ticker, I want to emphasize that the way to become a millionaire is to go long and strong, okay? You need to take out 6 to 10% and just passively invest in the stock market, all the way up to as much as you can get to, okay, towards retirement. I'm going to say that's the biggest thing I'm going to emphasize because I want to be careful. I don't want to create traders from this channel or from this show, okay? This show is really meant for education purposes. I'm not a financial professional. I can't tell you what to do, when to do it, how to do it, okay? Education, I believe, helps you feel comfortable with investing in the stock market, knowing the market mechanics, which is what we're going to go over, knowing how hedge funds operate, knowing how to read a balance sheet, so on and so forth. These are things I'm going to learn along with you guys. And again, the more education you have, the more you can feel comfortable being part of the great financial system that the United States has to offer, okay? So to get started, I've got here some new technology. I've got my Apple Pencil Pro. I've got an iPad 13 so I can write on while we talk about these things. And then in front of me, I've got my computer that's showing a video that I recorded yesterday on Target stock. TGT is the ticker. And I'll show you guys that, and then we'll do some drawings and we'll kind of get a feel for the mechanics of the stock market. So now I'm going to go over 3 areas in the stock market where I think some of the mechanics are important. Now, first, number 1, we want to look at the participants in the stock market. I think that's very important to understand, to know who the players are and how that all works. And then number 2, we're going to look at the type of orders we can do. Okay? And then item number 3, we'll look at more of the advanced participants and how they actually generate revenue in the stock market. So let's look at area number 1, the participants. So who are the participants? Well, you got buyers, okay? And then you got sellers. All right, now buyers, usually they're kind of like, chilling, just kind of, sometimes they're scared, and sometimes they're greedy and excited. Sometimes they're fearful. It just depends on the mood of the market. Now, sellers, on the other hand, they can be kind of 2 ways. They can be sad, okay? Or if they're doing really well in the markets, they might be really happy. Maybe they made some profit on Palantir recently, and that's why they're selling. So you got buyers and sellers. And then in the middle here, you have brokerages. Okay. And these are the people who the buyers and sellers go to when they want to buy or sell stock. These are companies like Fidelity, SoFi, TD Ameritrade, Schwab, Robinhood, Webull, et cetera, et cetera. There's all sorts of brokerages out there. Kind of pick whichever one you like. And these guys, we'll get into how they make money, but they work with 2 different types of participants in the market. They work with the exchanges, okay. All right. And the exchanges are places like the New York Stock Exchange, the NASDAQ. There's also exchanges in Philadelphia, Chicago Mercantile Exchange. Maybe there's some other ones out there too. There probably are. I don't know all the details of the exchanges. That would be probably for a whole nother video. And then the other participants are the market makers. Market makers. Yeah, they're in the same circle. These are, well, it's really, I think there's like 2 or 3 of these, probably more than that, but there's one main market maker, and their name is Citadel. Okay, you may have heard in the past, Robinhood, they started, or they make most of their money from payment for order flow, and they work with Citadel directly, and Citadel gives them a cut of all these transactions that go on. Okay, and we'll go over the market makers and the exchanges in the third area of this presentation. So let's go ahead and erase those. Buy buyers and sellers. All right. So item number 2, let's look at the different types of orders there are. Okay. So we're on orders. So we got the 5 participants, and the people who are placing the orders are the buyers and sellers. Now, there's 2 types of orders you can do in the stock market. Now, 2 main types of orders. There might be other types out there, but the first type is a market order. Okay. Now, market orders, you are willing to go and chase the price of the stock. Okay, you're willing to go and pay more, or you're willing to sell for less. This is very typical of market orders. You're willing to move to the active price in the market to where you can fill your position, whether you're selling or paying, or whether you're selling or buying. Okay, and then there are limit orders. Okay, limit orders, you're willing to wait for price to reach you. So price to reach you. All right. You're willing to wait for the market to come to you rather than you going to the market. Okay. Now, there's advantages and disadvantages to both. And I think for a future video, we're going to get into that. But I think for this video, I want to keep things really simple and at a beginner level. So, and for most retail investors like myself and many others out there, the thing that you probably want to go with is the market orders. Okay, unless you have an extremely large size portfolio where if you do a market order, you get kind of really bad fills when it comes to filling your position, then you want to consider limit orders if you have very large positions. But for the most part, most of us average investors, we're probably going to do the market orders in general. So just to give you an idea of the mechanics of that, we can go into that more in detail in a future video, but I wanted to keep things simple. So that has to do with the orders and what kind of things that you need to look for in the stock market. And I'll actually take you guys through a real trade on this channel. We'll do that in the future. I'll do a real trade. I'll use a couple $1,000s and try to make some money. Who knows? And I'll show you screen shares of the actual Active Trader Pro that I use. Now, let's look at the participants in more of an advanced perspective in the markets. Now, the stock market is just like any auction out there. Like maybe you've seen an auction at an estate sale where you've got an auctioneer. They're saying, can I get me 50, 50, 51, 52, 53, 54, right? And you see all the participants, they're holding up their little signs that are saying, oh, I'll buy it for 50, I'll buy it for 51, so on and so forth. That is exactly how the stock market works, guys. It works just like an auction at an estate sale, or maybe even the Barrett-Jackson auto auction you've seen on TV. The stock market is the exact same thing. Now let's start with the buyers and the sellers. Okay, we've got the buyers. Okay, these are the ones that hold up the signs saying, hey, I'll take it for 50. All right, what they're doing is they're doing a bid. they're bidding on the stock, okay, or bidding on the item, for example. All right, and they're holding up their signs. And for example, let's just say they're bidding at $50 for a stock. Okay, we'll assume it's Apple stock, AAPL. Okay, and then you've got your sellers. They're the one at the auction asking the auctioneer to sell their shares at a certain price, and the auctioneer he's going up and down, right? You've seen that before. And so they're doing what's called the ask, all right? And they're asking for, let's say, $51. Okay, they're asking a little bit more than where the buyers are at. They're at $50 today. Now, what's interesting about this is that we've got a problem here. We've got 50 and 51, so we've got a gap, all right? And this is what's called the spread, okay? And somewhere in between there, we've got a market or an opportunity to make money, and that's where the market makers come into play, and the brokerages and the exchanges, okay? All three of these players work within this spread, okay? And what happens is you get a bunch of people in the middle who are willing to go up to the ask, okay, or down to the bid and do market orders. Okay, these are all like market orders coming into the auction, and people are willing to spend $51 on the stock. Or let's say maybe an exchange has them at $50.75. Oh, cool. Well, somebody got something on sale versus at $51, so on and so forth. And maybe somebody came in and wanted to sell their shares not at $50, but maybe $50.25. Cool. They got a deal from, let's say, the market maker here, and then somebody got their shares. Okay. So, you know, this whole spread that I'm talking about here is really where all the price action is. Okay. So, you know, it's an interesting thing to watch in real time. It does get kind of messy, and you've seen times in the market where you'll see system crashes or just spikes going up and down. That's because there's a lot of action here where these brokerages are just getting tons of orders, and you get these huge candles going up and down. So that's where all the money is made in the market as far as the back end of the market. The market makers and the brokerages, they work with that spread for the most part. And yeah, you know, I'd like to get into probably more of maybe advanced videos in future Friday ticker shows. I'll show you some of that. But I do have, I did take a recording of Target the other day. So I'll show you guys basically over here. That's not good. That's not a good circle. Basically right there, you've got your price action where, you know, we're in between the spread here. Okay, this is where stuff is happening. Okay. And then down here, this is where all the limit orders reside for the market, for the exchanges. Okay, every exchange has this book of orders, all right, that people have entered in throughout the last couple months. And so this is called level 2 when you look at your brokerage, an active trading platform essentially. You'll see all the different orders that are available in the stock market. You can kind of see who wants what in a sense. And then you'll see that order book adjusting all day long, all through the day of the market. And then over here, I've got time and sales. These are real trades that are happening as of yesterday morning. I think this is pre-market. As you can see, there's like a line here. I think the market was about to open when I recorded this video. So once the market gets open, it'll start flying up and down and whatnot. So it's kind of fun to watch. So I figured I'd, you know, kind of show you guys what that looks like on an active trading platform. You know, most of the time people don't really see this stuff. They see more of just the typical, you know, Robinhood, you know, line chart or whatever. But, you this is the real market. When you look at something like time and sales and level 2, this is what, the big money is trading with. Even retail investors like myself, I'll look at this and say, oh man, there's a lot of red going on. You see all that red that just came up just now? That means there's a lot of sellers pushing the price down. They're going down to the bid. They're coming down on it, right? When you see all that red. And then when you see green, okay, that means that people are going above the ask. Okay, and that's what that time in sales tells you. Now, I've seen days where all I've seen is just red, 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 just rows of red, and then maybe a tiny bit of green. Or I've seen days where it's just green the entire time. So you get a feel for the vibe of certain markets, and whether it's a frenzy or a panic, it just depends on the day and the news, most likely, so on and so forth. But yeah, this is just a basic tutorial. Look, right now it looks like the market just opened. As you can see, that candle just opened up right over there, right? You can kind of see the trades start to come in quite a bit faster when the market opens at 9:30 a.m. Eastern. But yeah, that's a little bit of a beginner's tutorial on the mechanics of the market. And yeah, I'm going to continue to dive into more advanced techniques. I'm looking to do like some candlestick knowledge, and we'll get into more of the limit orders and what can happen there as well, and reasons why you would want to do limit orders. We'll get into more depth on that in future videos. So anyways, if you guys have any questions, comments, anything you want to learn for these Friday videos, let me know in the comments section below. And if you guys could, like and subscribe to the channel and take a look at my previous video. And everyone, have a good day. Thanks. Bye. See you guys.